Do you have any competitors in your field?
We would wish we would have some more. There's a lot of activity in the very early stage, in the discovery of new ideas. I mean, there are plenty of business plan competitions. There is today almost an industry of business plan competitions where young aspiring entrepreneurs go from competition to competition without ever having a serious commitment to actually build a business. And on the other hand, there is right now almost a little bit too much capital chasing too few deals in the kind of more established and more commercial impact arena, where, as I mentioned, you have 500 billion right now. And if you ask the managers what they usually say, what their biggest challenge is, find really good investment opportunities at reasonable conditions. And what's somehow missing is this part in between, which we call philanthropic impact investing, where the firms are relatively young, but they are big enough that they need significant commitment in terms of money, in terms of patient capital, and in terms of support. And so our ambition is typically to be the first institutional investor after friends and family and angels, and then to develop the company until we are the last philanthropic investor, before then more commercially oriented impact funds or venture capitalists come in. And in that field, we would wish there would be some more. I mean, there are some where we work together. There is Shell Foundation, for example, that has a very similar approach. There is LGT Venture Philanthropy. There is Mercy Corps Ventures in the US. So there are a few. But we're talking about dozens. We're not talking about hundreds or even thousands. And in my book, this would be an important way, because any young company at some stage needed philanthropic support. It may not have called it like that, but if you look at the venture capital industry, and if you take away the top 1% of companies that funds the failures of all the rest of the 99%, it's essentially philanthropy. We will have some that are profitable. We will have some that fail. We are very proud when we looked at our track record. We have made 40 investments at elea in the past 15 years. Half of them at or above expectations in terms of impact. Another quarter was positive but below expectations, and another quarter was either failures or was too early to tell, which is quite a good record also relative to the private equity standards. But it's very expensive. We go there, we get to know the people. We are incredibly selective. We look at 300-400 ideas and projects per year, and then make 3 to 5 investments. I'm absolutely convinced that it is a good use of philanthropic capital, because, and we have learned that as well on our journey. I mean, initially we also invested into projects, like traditional development project work, often organized by aid organizations funded by either private or public development aid. The problem with any project is you have an employed project leader. The project leader has a project duration, which may be 6 months, which may be 1 year, which may be 3 years. But once the duration is over and the project leader has left, the impact will fade. It will may continue a little bit, but after a few years, it will basically be faded. And the difference, if you invest in an entrepreneur, and we have a few stories in our book, an entrepreneur will not think in months or years. An entrepreneur will think in decades and generations. I mean, those social entrepreneurs that are burning for their idea, they want to make this successful for their generation and even beyond. And that's the difference. And if you think back about how the successful economies on the planet were becoming successful, it was exactly that. It was not, I mean, the US economy, the Swiss economy, the Australian economy, they were not built by development projects lasting for 1 year, 2 years, 3 years. They were built by passionate entrepreneurs who basically implemented an idea, and in the best of all worlds, obviously could inherit that idea, that company afterwards to their children and their grandchildren over 2, 3, 4 generations. And that's why we call it sustainable. That's why our mantra is impact through entrepreneurship, because we feel that entrepreneurship is so much more sustainable than traditional project finance work.